we're seeing disruption to global trade that has, obviously sent shockwaves, or the initial shockwave through markets.
Yeah.
But where do you think we are now, and what are you seeing?
Well, I think there's a bit of a standoff, isn't it? So markets have warmed up a bit on the expectation of some sort of accommodation, which is probably right, but always inevitable.
Yeah.
And so we've all got very varied sources of news now. So I was reading the BBC on the way in from their reporter embedded in Washington, and that seemed to be like the Washington consensus, which is that perhaps Trump sort of over-egged things a few weeks ago, and now they're reining back. And I think that's what the markets are like to believe right now.
Well, that's it, and it's whether we're in this situation of hope.
Yeah.
Of we actually think, well, surely they can't, or is there a power struggle within the White House? And Bessent is obviously market friendly, whereas Navarro and Lutnick seem to just be.
Well, maybe in this sort of good cop, bad cop. So I think that's clearly, and it may be genuine, of course. So Navarro actually, went to prison, on, at least from his point of view, on principle. Yeah. And while Bessent is an old, worked for a hedge fund, didn't he? So I think you've got different backgrounds, and I'm sure I'm not a mind reader, but there's always a debate. But ultimately, you can see that Trump is driving things, and as we all know, he's looking for that deal.
The art of the deal.
Yeah, exactly.
Do we think that, I guess, since 2008, there's been this incredible brand built up. USA is a brand. Mm. Is he starting to damage that? Is that what we're seeing in the treasury market and the dollar?
Well, I think a little bit of that, and we noticed that sort of reverse correlation, didn't it? When markets were getting riskier, actually the dollar weakened, which is a new thing. I think what's clear is there's no alternative, right, to the dollar. So perhaps the euro, I think, for a short period of time was seen as a source of stability. But I think with war on the fringes of Europe and demographic and economic challenges in the eurozone, I think that's unlikely to be the substitute reserve currency.
Yeah, scary thought. If it was, thinking back to 2011.
Exactly. The pigs and all of that.
Yeah. So I guess it's a struggle now to know have we seen the level of brinksmanship or this standoff between China and the US. Do you have any sort of feeling which one of them might blink or where it might go?
I don't think it will be quite so binary, actually. Okay. I mean, again, no one's got a real crystal ball, but you saw, I think, the announcement from Apple saying that they were going to move production for the US market to India.
Yeah.
So I think that was quite interesting as a way of sort of softening up, if you like. But I think that China might be at the end of a series of agreements. And if you were the US negotiating, you might want to close out some of the smaller countries first, possibly even the UK.
The easy wins.
Yeah, exactly. Where there's a lot of incentives to do that, without actually giving up much from the US perspective and putting pressure on the bigger economies. So that's what I would see that as the first sign rather than China.
You've operated at the real business end of companies for more years than we'll mention. Yeah. How do you make the big business decisions when there's so much uncertainty?
I think it's really tough for CFOs, for boards, but it's very company specific. So IG, is an example where we're not exporting manufactured products into the US. Yeah. So actually, volatility in markets is arguably good for our business. So I think it's very business specific, and you can see some of the exporters really struggling with their earnings guidance because things are so unpredictable. So I think rather than general sell-offs, which is what we've seen in the early days, I would expect markets to be picking things over and looking for those that are relatively sheltered from what's going on versus those that are sharply exposed. And we saw that in COVID and Ukraine.
I heard one of the big fund managers saying, right, all we've done is we've put our holdings into 3 baskets.
Right.
those that are affected by trade, those that are affected by a potential recession, and then those that are immune.
Right.
And we've taken a little bit down here and we've put the money into these ones.
Yeah.
Just to be safe, I guess.
So that can be, there's an argument. I mean, that sounds like more of a trader's, argument. And whenever you hear those, you think, well, did you do that before or after the market reacted?
Yeah, well, it was very much after that.
So, for traders like many of our customers, they can take a view day to day. For long-term investors, it's really hard to pick winners and losers. And I think ultimately there will be a short-term solution to the trade, and then what happens in the long term, it's very difficult to tell.
Yeah, because it takes years to get those supply chains perfected, and when it comes to sort of deciding on guidance, run us through a more general idea of how a CFO, and because it's going to be a big move for those over in America at the moment. When you're going into earnings season, how do you decide what the guidance should be?
Well, I think what's really important is to be clear on your assumptions. And when I used to be a CFO of a bank, interest rates are super important. And many CFOs got tied up in knots because they weren't clear on their interest rate assumptions. Was it the period end? Was it a week before when they were getting their script together? Was it today? Yeah. So I think being really, really clear on what your assumptions are, then you can't be faulted. And I think the challenge obviously is the market tends to forget those assumptions, but that's what gives rise to confusion on the day. And I think we're seeing that with some of the tariff affected companies. They talk about, well, here's our guidance based on this sort of view of the world. Clearly the view of the world could be different. And I think that's all you can do. I think internally, or from terms of business management, all good management should work with scenarios. They don't have one view of the world. So you need to say, well, this is what we think is likely to happen, but we're safeguarding our downside. And Apple's a really good example. Do we really think they can move production within 18 months? I don't think so. No. So they've obviously been planning for that for some time, and they've triggered their contingency plans. So I think all good businesses internally need to deal with scenarios, but externally give a clear indication of your assumptions and perhaps aim off a bit, be a bit prudent. Right.
So part of being a management team is actually already having predicted things well ahead of time and having a plan.
Well, I think the prediction markets actually anticipated Trump, didn't they? Well before November the 5th.
Yeah.
Maybe none of us really believed that, but it was clearly a possibility. And Trump has been going on about tariffs for some time. Now, it's really quite difficult to anticipate, one move after the other. But I don't think it came really out of the blue, notwithstanding markets' reaction. So I would expect, many management teams, certainly on the manufacturing side, to be diversifying their supplier base. And that's what you're seeing, I think, and big manufacturers triggering their contingency plans.
Yeah, it's the difficulty is when we see money come out of the US. If the brand has been damaged, then Larry Fink came out and said he likes the look of the UK.
Yeah,
and there's many undervalued companies in the UK. Do you think that we start to see some money come into UK at last?
Well, we've seen that, and we've seen some of that, which is perhaps it's a catalyst for growth off and income on. So the UK is lower growth perhaps, but higher income, and so the tariffs was a catalyst for that rotation. I do think. I sort of never bet against the US, right? So I think it's interesting. The markets are very focused on tariffs, but I think for me, what's reassuring is at least the administration or even consensus in the US is taking the deficit seriously. So the US deficit, is extraordinary, and the bond markets have been less of a check on that than they've been in the UK and Europe, and so I think whether it's tariffs, but Doge or generally, there's a greater focus on fiscal discipline in the US, which I think is long term a good thing.
Yeah, and they haven't been given the sort of rewards for that in any way. It almost feels like they're doing the right thing, just in the wrong way.
Yeah, I mean, it's the art of the deal, isn't it? I mean, I think we can't second guess it. I mean, it's a difficult job. I think all politicians have difficult jobs, so we're a little bit, we're in the spectator stands rather than on the pitch on this one.
Yeah. One other potential place to put the money is into gold.
Yeah.
We've seen a lot of clients to move their positions into gold. It seems that governments have been doing the same for years. What's your feeling? All-time highs at just below.
I know it's sort of incredible, and it's the asset class of last resort in many ways, so perhaps understandable. And gold is decent to have as part of your portfolio. I mean, will it be lower in 1, 2, 3 years' time? One would hope so, because that means the world will have returned to a calmer place.
Yeah, true. And the budget deficits have been got under control.
Potentially.
Excellent. Clifford, is there any particularly enlightening questions that you're getting?
Well, I do think questions that, I mean, all I can say, I mean, the month of April has been something of a holiday period. I think it's when Easter fell quite late. I do think the world's a better place when the weather's nice. Like you can see, I'm in a t-shirt. I walked across the city, feeling quite positive about things. So we always look at the latest crisis as one-off, but we've seen a whole series of these over the years. Personally, I think it's refreshing, because if the markets are constantly positive, you get this build-up of bubbles that ultimately get popped. So I'm not a downcast. I think there's opportunities for IG, there's opportunities for our clients. Mean reversion is often derided, but perhaps it's all part of how we think about life. We have a view of what's normal, and when things depart from normal, we expect it to go back. But I think if you do believe that, then crisis is a time to pick up assets that perhaps you've been looking at and monitoring, but were just too expensive. And I would encourage that sort of approach, rather than to scramble around and exiting, high risk and going into high income and trying to get ahead of the latest gyrations of the market.